Happy New Year. It's also the start of the first quarter, and your NCGA economist team is coming to you live from our action team meetings in Louisville, Kentucky this week. We're hitting the ground running, and we're having lots of great conversations about what's happening in the economy right now that impacts corn and in a lot of our connected industries, and looking ahead to the future of corn.
Ready to get into it, Krista?
Yes.
All right. Well, it has been an exciting week both here in Louisville and in the markets. Monday, we got our January WASDE report from USDA, which is widely regarded to be kind of the final supply side numbers that we have finishing out the 25-26 crop year. Locking in what we have to work with for the rest of the year, telling us what we have in our buckets. And Krista, 2025 in terms of USDA reports was a bit of a roller coaster, and I was hoping we were going to have a nice, quiet report. Everything we were expecting, no market surprises, and I think we were proved very wrong, and that 2026 is going to be just as much of a wild card as 2025 was. So thinking about that report, what did we learn? What did that USDA report tell us?
Yeah, well, like you said, definitely not a quiet report. I heard, one analyst referring to it as a bearish bombshell, and I think that that's a pretty good way of putting it. So, yeah, going into the report, the yield projection that was out there, I think yield was the number that so many of us were looking for, and the yield projection was 186 bushels per acre, and the pre-report market analyst average was expecting about 184 bushels per acre. And so instead, we ended up with 186.5. So while, I think the analysts that were surveyed and basically everybody was expecting a lower yield, we ended up moving half a bushel higher. And, for the last couple months, we'd been looking at a production number with a 16 in front of it for the first time. And we ended up with a 17 billion bushel corn crop. And, that is a lot of corn as we think about the future, and that's a lot of what we're talking about here this week too.
For sure. And I want to take a second just to talk about how much corn that is and give our farmers some credit for how impressive of an achievement that is. This is 7.2 bushels an acre higher than the last record we had, nearly 11% higher than our previous record production number, which is incredible when you're talking about the sheer volume and size of what these farmers have accomplished through technology, through improvements, through stewardship of their land. This is a really, really impressive achievement.
Yeah, I think that's one of the things that is so incredible about our corn growers here in the United States. The other piece of this that was interesting in the report is that planted acres inched up higher to 98.8 million acres, which is the highest. You have to go back to the 1930s to a previous time where we had corn acres that high. But what is so cool, corn acres being about the same as they were in the 1930s, and yet our production today is over 6 times greater. And just like some of those improvements that you talked about, really important as we think about at the future going forward and the production potential that could be out there too.
So the supply side reaction in markets was definitely, caught by surprise. We saw a 24-cent drop in nearby March corn futures on the day of the report. A big reaction. So it's unclear how much of, corn is still unsold or out there, but it's very evident based on that market response that the market does think that there is a lot of corn still out there to find a home.
Yeah, the market definitely responded to that supply side. And, as we look ahead, these are the supply numbers that we have to work with now, because this is, like you mentioned earlier, considered to be the final supply numbers. So as we think about what is the market going to do going forward, a lot of that will be dependent on what happens in demand, because we still have quite a bit of the marketing year through August left to see, how that side of this, the balance sheet comes out. And one of the things as we think about the demand changes in this particular report, very little changes on the demand side. Interestingly, USDA did drop feed and residual use. Excuse me, they did not drop it. They increased feed and residual use by 100 million bushels. The expectation going into the report was that it would likely drop. And so, that was kind of an interesting change, and it's going to be something to watch. And I think one of the risks for the market going forward is if we do see some trimming back on demand. But I think on the ethanol front and the export market front, the progress we've seen, we get weekly update numbers in those areas. So that's really helpful to keep tabs on what's happening. And I think that those would support the numbers that USDA has out there right now so far. So yeah, looking ahead, market dependent on demand. And also thinking about demand, we've talked about the massive record supply. This is also a record demand year. And that's kind of overshadowed by the fact that we have this 17 billion bushel corn crop. But this report moved demand to 16.4 billion bushels, which is a record by 10.5%. So kind of similar to the type of record set on the supply side. But unfortunately, it still falls short of that supply number and is adding to the projected ending stocks, which are raised to 2.2 billion bushels. And a lot of times we think of anything over 2 billion bushels as being burdensome levels. And so as we, think about that, it created a heavier stocks to use number. And that is also adding into the pressure we saw in the markets.
So looking into, the second half of the marketing year split, that's really a demand side of the balance sheet equation, right? These are the moving pieces. This is going to change. And so the work we have cut out for us at NCGA, right, is to solve that demand question, drive prices, drive use. And so that's what we've been talking about a lot here this week, hearing big ideas, bold ideas for moving that corn and increasing demand to keep up with the really impressive skill and talent of our growers to produce that supply. And so, Krista, earlier this week, we released our quarterly one outlook for kind of the top things we were seeing on that side that we're going to move prices. We called it 6 and 26, kind of what we were watching as moving pieces. And so top of list or top of mind, especially coming off that report, which of those items are you thinking about today?
Yeah, so one of the things I'm thinking about, I think it's hard to not be thinking about after just getting this USDA report and seeing that, highest corn planted acres number in 9 decades. It's the question of how many corn acres are going to get planted here in 2026. And, as we look ahead right now, the market signals, if you look at, because so many corn acres are also soybean acres, they're part of a corn and soybean rotation, looking at market signals for that right now, that is and has been supporting corn acres. Now, I don't think that means more corn acres than 2025, but it could mean maybe more corn acres than what would otherwise occur. We kind of have this every other year trend of, a higher corn acre year and a lower corn acre year as we see some of those acres flip between soybeans and some other crops. And so as we look ahead to this year, and one of the things that I'm thinking about is we could have a corn planting that's several million acres below last year and still be what I would call a high corn acre year. Absolutely. And so, I think that as we think about just not just 2026, but also beyond, this growing structural difference between supply and demand, where farmers are producing, and the productivity story is so amazing. But to your point about a lot of what we're doing and the work we're doing at these meetings is, what are the demand opportunities that can help use this corn crop that we're producing?
And so I think for the next, part of that equation is we think of what farmers are going to put in the ground, how they're making those decisions for what is best for their operation. I think something that has definitely been emphasized by this big crop going in is that price and profit are two different things. And we have this really high volume situation, but we have a lot of farmers that are saying cost of production is too high. I can't make a positive return. This is a real issue, and we've seen those input costs stay high. So the geopolitical and global events affecting that, particularly in fertilizer, I think are something to watch this year. We saw really high costs. We saw a lot of spikes this year, particularly in phosphate, even nitrogen as well, that have made it a real struggle for producers to return a profit. As they think about what they're going to put in the ground, I think that's still a consideration that people are going to have. And so we've seen and expect some easing as we've had some resolutions, but there's still a lot of things out there this year, and especially a more volatile geopolitical environment that could move the needle up or down. We look at the war in Ukraine, resolution to that could provide some relief, or at least a slow down of increasing costs, right? But you never know what you're going to get, and a wild card to impact those supplies and those prices, especially as we come off a really high input cost year.
Yeah, I know. There's so many dynamics that are coming into play in this situation, and certainly geopolitical events are one of those. And we've just seen. It seems like that's never changing. Like we just have recently had the events in Venezuela, and you never know when, like, the wild, to your point about a wild card adding into this. I know, thinking on kind of the global front, you've been doing a lot of work lately on thinking about the upcoming renewal of USMCA, and that was another one of our 6 things that we talked about. Can you share a little bit about that?
Absolutely. I will get on my soapbox for a minute because this is a critical issue for corn farmers. USMCA has been great at keeping the free flow of, we're really good at growing corn and when our neighbors need it. So this is a clear mutual relationship that works. So Mexico takes about 40% of our corn exports. Canada takes about 40% of our ethanol exports. And when you take corn and ethanol and kind of the equation of what that is, that's close to 2 billion bushels of our supply that we are sending to these partners. This is critical. We have a review coming up in July, and it is imperative that we keep those relationships. We work really hard to emphasize that we have a great product, we're great partners, and we want to maintain that relationship. It's a natural partnership that we have with our neighbors to send the thing we produce really well. It's really, really important and beneficial to corn farmers' bottom lines. And I think that's maybe one of, if not the biggest things that we need to secure and keep to have that reliability for farmers to make plans and invest and expect that demand to be there.
Yeah, and I mean, to your point too, like, the 40% of corn to Mexico, 40% of the corn we're exporting to
Yes.
Mexico, 40% of the ethanol we're exporting to Canada. These are really important markets. But the other piece of this is that since USMCA was first enacted, those numbers, Canada and Mexico were already solid trading partners prior to that, but we've seen the amount that we're exporting increase since then. And so, not only is this, a critical moment now, but also thinking about the future.
Where can that go from
Can
here?
it continue to grow, and how important that is. Another thing that we don't always think about that influences our export markets is the macroeconomy. And thinking about potential changes, well, not potential, but changes that are coming to the FOMC leadership here in the coming months, and then just macroeconomic conditions like interest rates and currency values, and how those impact the value in our global markets. Interest rate moves. We know that a lot of farmers are highly leveraged, have an operating line because there's the burden of high costs at the beginning of the year. You pay for all your inputs up front before you have any production to sell. So when interest rates are higher, that can start to add a lot of costs. We already talked about high cost of production in general, but that can add to it. But maybe talk a little bit about why currency values are also important, and the value of the dollar in this year, or in
Absolutely. We're
2025.
going to talk about kind of the demand side too, or the consumer
Yes.
side, right? And so a lot of uh, the advantage or something we have is the strength of the dollar. So when we're looking at exports, that's something that people are looking for discounts or risk and going to impact, especially when we're looking at our competitors to the south, Brazil and Argentina. That's something that is constantly on the mind of people that are trading. They're following those currency markets just as closely as they are following commodity markets. That is a moving piece. And you look at a lot of different things as macroeconomic factors. A farmer, I feel kind of, has to keep up with everything. They have to be an expert in geopolitics and macroeconomics and then plant their
Yes.
crop too. So it's one of those moving pieces that may not be front of mind, but is going to impact every single part of from the demand and consumer side of what we're exporting, what the health of the economy is, whether protein, gasoline use, but then also what that cash flow looks like, or their borrowing rate, et cetera. So, maybe not a wild card necessarily. Who knows what we're going to get out of that, but something that is kind of a back burner thought that's going to influence a lot of things this year.
Yeah. And I think exports are always going to be an important market for corn. But as we think about, there's so many things that are out of our control. And as we think about global trade, and we think about these macroeconomic factors that can influence that, in addition to just general relationships with different nations and other nations with each other. One of the things that we can do to really solidify a use segment for our corn is to bolster how we can use it domestically. And so, one of the things that has been a huge priority for our organization for a long time is higher blends of ethanol. Ethanol for on-road use in motor gasoline has already been a great demand segment for corn it's grown over the last 2 decades, but we've reached kind of a plateau level because of some of the policy around it right now. So getting E15 passed is one of those things that we could do this month.
Right now,
right now, yes. As Congress is thinking about the actions that they're taking this month, and so that is something that could happen right now. And I view it as the most straightforward, simplest pathway to opening up some opportunities domestically for corn in the short run. And as we think about that, though, one of the things that we are really challenged to do right now is I mentioned earlier, but like this growing as we look long term. If we want to continue producing corn and we think about the productivity trend that's out there, as we look ahead, this growing structural difference between supply and demand. So I think as we think more long term, one of the really amazing things is that we've been thinking of ethanol as an on-road fuel, but ethanol is actually something we can use in a lot of other ways. And it's pretty amazing some of the opportunities that are out there when you think of ethanol as a raw material that can be used in other products. And so whether that's things like plastics or fibers or products like that. And so that is also a lot of what we are working on, and also thinking of it for things like maritime and sustainable aviation fuel, which is something we've also been talking about for several years. But I think there are exciting opportunities out there, and some of these are things we can work on domestically.
Absolutely. And Chris, I'll let you wrap up with our last of our 6 items, being, we talk about all these opportunities, we talk about kind of the struggles, we talked about prices earlier. And so what does that boil down to? What's at stake? What's at risk? What are farmers dealing with as they're making these decisions in terms of their own financial health or viability?
Yeah, so I mean, one of the challenges is here we are at the beginning of 2026. We've had 3 consecutive years, 23, 24, and 25, where on average, the cost of production was higher than the returns per acre. And so, a lot of times we say when we think about farmers are used to a lot of ups and downs. Their income is it's not like they're on a salary with a steady income. And so they're used to these ups and downs. But what gets really challenging is when you think about 3 years in a row of losses on average. And then looking ahead to 2026, the profitability picture isn't better. And so looking at a 4th year of that. And I think that's where these conversations that we're having here are so critical, because we're sort of at this pivotal moment where we need real change to happen, and thinking about some of those demand opportunities, and really thinking about the fact that there's no one silver bullet that can allow us to achieve our goal of hitting greater corn demand. It's going to take many lead bullets. And so that's why it's exciting when we think about things like the different demand opportunities that are out there, because we're going to need to take shots at all of those, so to speak, in order to work towards greater corn demand so our corn growers can continue producing the crops that they produce so well. Thank you for tuning in. Gretchen, it is only the 2nd week of January, and we already have so many things to think about for this year and beyond. Continue to stay tuned in to our NCGA Corn Economy page and follow our social media channels as we continue to keep you updated on what's happening in the corn economy.